If you're curious about the future of clean energy, this video is for you. Sit back, relax, and let's dive into the world of renewable energy. Before anything else, make sure you're subscribed to our channel, and by the end of this video, please do give it a big thumbs up. With that said, let's get started. There has been a lot of talk lately about Tesla stock and where it's headed. Some people are saying it's going toe decline to 69, while others think it might break 100 again as it did back in January. But what's going on here? Well, one theory is that Elon Musk has been selling Tesla shares all year to fund his purchase of Twitter, and that SpaceX is also for sale. If this is true, then the stock may continue to go lower if they're pushing out a manned trip to the moon, which is what the rocket launch was all about. But is this the case? Some analysts are skeptical. For one thing, Twitter just marked down for $44 billion to $20 billion, and Elon is not a very liquid person. He used to be able to get whatever lines of credit he wanted, but now he's got all these banks on the hook for debt that he can't service based on Twitter's business. However, Twitter is breaking even and Elon expects it to become profitable very soon. So what does all this mean for Tesla stock? Well, some people are speculating that Elon might be entering the endgame as CEO of all these companies he's leveraged, and now that the stock is broken, it might be time for him to start thinking about his exit strategy. However, some believe that Tesla is still ahead of the curve in terms of AI chips and battery development. They might have to start licensing this technology to some of their competitors, but that could be also another big opportunity for them in the end. Tesla's fundamentals have changed, although the stock hasn't been downgraded yet. This might happen in the upcoming months, so for now it's critical to monitor the stock and see where it goes from here. Now let's take a creative look at how to explain this information to you. Back in January, someone predicted that the price of Tesla stock will reach 180 in a short period of time. Although they are not explicitly pivoting, the company is focused on growth at all costs, even if it means cutting prices to keep up with the demand. However, there are some fundamental issues with the company pricing and margins that people seem to be overlooking. Analysts and investors alike are beginning to question the sustainability of Tesla's success. A few months ago, they were encouraging people to buy. Now, they are saying to hold on and not buy anymore. The price target has been increased to $185, but the downgrade is still deemed weak despite this. One specific individual, it's not a good sign that Gary Black, a longtime supporter of Tesla, has reduced his earnings margin, and that delivery estimates for the company's inventory are rising, while backlogs are decreasing. In addition, the competition in China is getting more fierce, raising questions about liquidity and demand for Tesla's vehicles. As a long-term investor, all of this is meaningless to me, because what counts is product freshness. The inventory for Tesla's best-selling vehicle, the Model Y, is sliding down a cliff in the United States. While Ford has around 6.5 times more old cars on dealer lots than Tesla. Elon may think that Tesla's electric vehicles are commodities, but that's a risky way of thinking, because once a product becomes commodities, you lose your advantage in terms of price. Ford, a conventional automaker, also has some advantages over Tesla in terms of used car sales. In other words, there are some red flags that investors should be aware of. There's a lot of talk about Ford and Tesla and how they're doing in the auto industry, but it's important to keep things in perspective and avoid getting caught up in the noise. Some people believe that Ford is in trouble because they lost a lot of money selling electric vehicles last year, while others believe that the CEO of Ford might be correct in the long run, even though Tesla appears to be doing better right now. It's a bit of a tricky situation. Just one participant in the discussion, Rebecca, believes that Tesla is unique and shouldn't be compared to other automakers. She also believes that the future demand for automobiles will be somewhat unpredictable due to people using credit cards excessively and accruing debt. This could lead to consumers cutting back on their spending, which would be detrimental for firms like Ford and Tesla. Another person in the conversation notes that First Republic Bank recently failed, which is raising concerns about the state of the economy. However, they also say that Elon Musk is not to blame for market events, even though some may be blaming him. This person believes that Tesla is overvalued and that it is simply a car company, not a tech company as some people believe. In the end, another participant expressed concern that Tesla may be in danger due to their high volume of sales and potential decline in demand. They also mentioned that Tesla is unable to produce the car they desire for $35,000. Suggesting that purchasing an electric vehicle may not be a wise investment. Overall, it appears that opinions regarding Tesla within the auto industry are divided. But one thing is certain, In one video clip, Tim discussed how things are changing quickly, and it's difficult to forecast what will happen next. He also discussed how short-sighted it was to believe that Tesla had a long-term demand problem in 2019. Tim contended that if you zoom out and take a broader view, you'd see that Tesla was leading the way in the market for the least expensive electric vehicles, so it is doing well in the long run. If Tesla fulfills its goals and produces and sells 19 million vehicles by 2030, that would be a huge success. Recently, Elon Musk announced that he would be selling some of his Tesla stock to fund his space ventures. While this news may worry some investors, it's important to note that this decision shouldn't have a significant impact on the company's overall success. Elon Musk has made similar decisions in the past, such as selling PayPal to focus on SpaceX and Tesla, and both companies have continued to grow and thrive. Wall Street would be impressed, and the stock would soar. Tesla has a capable management group and a well-thought-out business plan. In the present, Tesla is facing challenges with demand. The company is trying to increase demand at all costs, even if that means cutting prices on their cars. This is the 5th price cut the company has done, which may make consumers wonder if they'll keep doing so. The rate at which currency depreciates is directly correlated with inflation. Investments, on the other hand, typically increase in value over time. Because of this, both Musk and Buffett advise investing, especially during times of high inflation, in solid companies with steady stock values. However, it is imperative to remember that choosing stocks carries inherent risk, and even if a company has done well in the past, there is no assurance that its stock price will increase going forward. All of the experts, including Warren Buffett, advise investing money in inexpensive index funds with minimal volatility. As a result, Summers now predicts an 80% chance of an American recession by the following year. The company has a strong brand, a loyal customer base, and is continually innovating and expanding its product offerings. These factors should continue to drive the company's success, even if Elon must sell some of his shares. Of course, there may be short-sighted investors who react negatively to the news, but it's important to remember that such investors may not be taking a long-term view of the company's prospects. A plan for Tesla's continued success, however, Tama believes that Tesla's valuation, which is significantly higher than Ford or GM, is the greater cause for concern. The business is currently selling at 42 times next year's earnings. This indicates that Tesla is pricey and may need to be valued more similarly to these businesses. It's also interesting to consider how many more cars Ford and GM will sell in 2030 than Tesla. Many people believe that Tesla will sell 10 times as many cars in 2030 as it did in 2022, which represents a huge opportunity for growth. Are you one of those people? If so, please share your thoughts in the comments section below. Don't forget to give this video a thumbs up and make sure you're subscribed to Tesla Insights.